My name is Caitlin Vestal. I'm Senior Manager of Education Services here at Iterable. And today I will be your MC in this room, so come back and see me often. So next up for our first presenter today, we have Aaron Cort. He's the Vice President of Operations at ClickUp. And ClickUp is an all-in-one productivity platform. So let's hear it for Aaron.
Cool. Well, I am really excited to talk to you guys today. Frankly, we'll start off with a little bit about myself, but I'm really excited to talk about what I think is important today, which is about how Lifecycle affects unit economics and why that's important in the market right now. So a little bit about me, you can see up there, I'm the VP of Operations over at ClickUp. I was one of the first 20 employees, so it was kind of a wild ride. I joined around 4 million in ARR. We were bootstrapped at the time. We grew to about 70 million ARR in a year and a half. I was overseeing marketing. We had a pretty small and lean team when I joined. It was me and about 2 other people. That team grew to about 25 to 30 within that time frame. And from there, we expanded a ton. I was very fortunate that when I joined, we had some baselines already built for Lifecycle, but Lifecycle expanded a lot during the duration of time, especially as the company grew. And I'll talk a lot about what the different journeys looked like, how we set up different technologies, and some really actionable tips along the way. But I will start with a baseline on just how to look at things, how to analyze Lifecycle, especially in today's market, and what matters. But it's been a wild ride at ClickUp. I've been very fortunate to be a part of that. Prior to ClickUp, I've been working in startups for a really long time. So I've seen it all, but we'll go to the next slide. So like I said, we're going to talk a little bit about the state of the market today. After that, we'll talk about how Lifecycle can connect to that. And then after, we're going to go into unit economics, an example with ClickUp's Lifecycle and how that all connects, and then some actionable takeaways at the end. So let's get started and take a look under the hood. So state of the market today, we'll start here because it's extremely important to understand what's going on in the market, and anyone that isn't aware in this room is probably living under a rock, but we are going through a pretty tough time, especially in tech. And one of the best things and the best news coming into a conference like this and thinking of what we do for a living for most of us here, and just looking at the audience, like, can I get a raise of hands for just people that work in marketing? All right, so pretty much everyone here. So with that said, big opportunity right now for people that work in marketing, because we have a big opportunity to influence efficiency and unit economics, and that's all starting with Lifecycle. And when I'm talking about Lifecycle, I'm not just talking about implementing an email campaign. I'm talking about the holistic picture of what impacts the customer journey, and we're going to go into that. But talking about the market for a sec, valuation multiples have been cut by about 60 to 70%. You can see a baseline there from Craft Ventures. This was in May of 2022, and you can see there that basically SaaS companies are valued much less based on their ARR than they used to be. And that's something to note. Why do we care about that? Because we get judged harder on business discipline and efficiency as a result of that. And a big part of our jobs, especially in lifecycle marketing, is to focus on discipline and efficiency. Now, not to say that we haven't been doing that prior to this time frame, but if we want to look at what good, great, and danger zone metrics are, I'll call out growth, net dollar retention, and payback. We've had some instances where I would say over the past decade, especially when the market's been fluffier, where you could hover in the danger zone and be okay. People raised a lot of money living in the danger zone for a long time. But what's changed is today, we have to be either good or great, and there's no in between. You get judged based on whether or not you're there, and if you're not, things get cut. And that's like basically the summation of what you can take away from this chart. And the things that we can control, though, are those instances of growth, net dollar retention, and payback. What is growth? Revenue growth. What is net dollar retention? How does $1 turn into more dollars over time? And payback is how many months does it take to recover what we spend? And we'll go into all this today, but just setting that expectation from the front. Now, the sweet spot, you can see here in a chart like this. This is from OpenView Partners in their SaaS benchmarks report. There is a sweet spot between CAC payback, and net dollar retention. The higher your net dollar retention, the more room you have to play around with your CAC. The lower your CAC and the lower your net dollar retention, that's obviously not a good place you want to be. But you can see that the two oscillate. A good range to be in for CAC payback basically is about 7.5 to 15 months if your net dollar retention is between 105 to 120%. Now, we'll talk a lot more about this, but just understand that these two work in tandem. There is an intersection between these, and we'll call that the sweet spot. And that's what we want to identify. And the thing is, every single business is different. Whether you're a PLG product, whether you're an enterprise product, or whether you're a consumer product. There is a way to look at this and analyze it, and then also understanding how that impacts our jobs, because this is like the top level, and of course it goes layers down, and I'll talk about a lot of this as we go through things. Now, highly intentional instances of who we target is probably the most important thing, I think, among a group like this to talk about. So you can see all the different breakdowns for how metrics look as benchmarks based on the customer segment size. Now, when we're thinking about Lifecycle, this is typically the place you'll want to start, but I'll talk to you about a few examples as well, where even with ClickUp, we look at instances like this, and we separate it out when we get to more like what we call a sales assist motion versus in self-serve, which is more focused on use cases. But we always should care about basically the segment we're targeting, because that will influence the roadmap for what unit economics matter to us. Now, what is the opportunity? Again, the best thing about everyone in the room today, the majority of us work in marketing, we can influence almost every single one of these things, which is great, and that makes our jobs important. So the lifecycle funnel, calling that out right off the top, we'll say website, sign-up experience, and then actually working within the app or the product. Those are the key parts of what would basically create a funnel. Everyone here works in marketing, so I'm not going to talk for ages about this. But going into the lifecycle events, these are just your standard events. Now, acquisition, activation, monetization, referral, and retention are the big ones I'll call out. But the thing that can swap, if you look at the graphic on the right, is retention and revenue, or monetization can sometimes switch based on whether or not a product is a freemium product or a free trial product or an enterprise product. Those different instances can switch within the journey, but these are the events that matter. Now, where a lifecycle fits, we'll expand on all of those different events here, because if we didn't, we wouldn't be doing a proper representation of what matters. Now, acquisition can be broken down into two different buckets: paid and organic. Paid acquisition, we can control programmatically. Organic, we can typically control through resourcing. Resourcing being people, of course, but you can also do a lot of fun stuff with AI these days, which can help augment a lot of those people resources. Now, going into activation, this is the aha moment that leads to someone experiencing a product and using it typically daily, weekly, monthly. We'll go into retention in a second, but asking yourself, what is the core event each user must complete to actively use, share, or engage with the product daily, weekly, or monthly? That is a basic event that needs to happen at the beginning of the journey, and if we don't understand that deeply, we're wasting our time. Monetization can be broken down into two buckets: new revenue and expansion revenue. New revenue is a new customer coming in. What are they spending when they come in? Expansion is how are they spending more over time. There can be instances as well that kind of live in the middle, where you get to referral, and when we talk about viral coefficient or K factor, which is how does one user lead to more users, that can be either on the same account or a net new account. If it's on the same account, oftentimes that can lead to expansion revenue if you're charging per seat. If it's on a new account, well, that's net new acquisition, and that would be a net new customer. But referral and monetization can typically work pretty closely together, as I'm sure, again, we all work in marketing, we're all aware here. Going into retention, active user retention and customer retention. Those are the two different types. Now, active user retention matters more when you have a freemium product. So basically looking at how active your users are and whether or not they have intent to purchase or buy. Those are the big things to consider with an active user retention, because it signals as to whether monetization will occur. Again, this is where retention can fluctuate within the funnel depending on where it lives. Customer retention applies to every single business in every single country in every single area of the world. This is churn, expansion revenue, and that leads to net dollar retention. We'll talk more about the unit economics specifically, and I'll give some very specific examples into how everything plugs together. Core unit economics, this is the stuff we care about, and what I said at the beginning, here's what all of us as marketers have control over. This is where I'm going to talk in depth about it and how we can exactly have control over these things. Now, the basics is what we went through. This is the fun stuff. I say fun as in like funner. Everything's fun when you do what we do for a living. You get to talk to customers, you get to influence journeys, you get to figure out, hey, how do businesses make money? That's really cool stuff. But really what matters at the top, so growth rates, the first instance we talked about was revenue growth rates. Growth rates can actually be broken down into top of funnel, middle of funnel, and bottom of funnel growth rates. You can see website visits, workspace or lead signups. Those are typically your top of funnel instances. Activations and conversions for monetization are typically bottom of funnel or middle of funnel, and retention, of course, also basically lives within that middle of funnel or bottom of funnel instance. Now, these are what we would call the leading indicators that lead to the lagging indicator that is revenue growth, right? These are the things that we can control, that we can be proactive about, that we can basically do from an influencing standpoint to get to the net growth rate result in terms of revenue, right? The other instance is less controllable, but we as marketers fortunately can understand what a lot of that is and how to get there. Now, going into net dollar retention and expansion, nurture, product onboarding, product paywalls, ad retargeting. You could also consider SMS as an experience that happens within influencing what we'll call the expansion experience. But this is everything that's happening after somebody has gotten into the product, they're experiencing things. But really, when you're talking about how does this influence net dollar retention, this is where you need to get methodical. Every single business is different. How are we influencing customers to get more value from our products, from our experiences, to pay more money over time, right? That's the basic fundamental of every business. And the better this part of the business is, and this is kind of your core instance that makes up lifecycle marketing. Of course, there's all these other buckets that live within lifecycle. But if you're not doing this and you're not focused within this journey and connecting all those dots, it's going to be really hard to control the business. The dollars that you spend are not going to be as efficient. And ultimately, you are not going to have as much control over how you grow and over how the business is doing. And that is a big, big part. Net dollar retention expansion, huge, big part of the people in the room. And of course, what Iterable does as a technology. And I'll give some examples too for how we use Iterable. But CAC payback, this is the money metric. This is the one that the investors typically care about the most. This is what did you spend? What did we get out of it? And really the bottom line result is you're looking at two different instances, CAC, and then basically your ARPA, which is average revenue per account, or your LTV compared to CAC. Your customer acquisition cost is what you spend, but depending on what your LTV is, of course, you can spend more. If your ARPA is higher, you can also spend more. But you're just comparing the dollars that we generated to the dollars that we spent, and how does that equate to how efficient we are, right? And we'll go back to those metrics, and we'll bring this ball back at the end. But those three things, again, I'll go back for 2 seconds. You have growth rates, remember, break that down by each step of the funnel. Those are the leading indicators. Lagging indicator is revenue. Net dollar retention and expansion, that can be influenced in all these different categories of life cycle. And then payback, this is the money metric. This is typically what investors care about, the board cares about, execs care about, all that good stuff. All of them matter, but again, CAC payback is probably one of the bigger ones. Now, what we didn't touch on, but something worth looking into after this on your own time, magic number and rule of 40. Those are other big metrics for efficiency, but we're not going to talk about that today, and we're going to dive into some other fun stuff. Now, ClickUp's Lifecycle. This is where I'm going to talk to you guys about some journeys, some examples, a few different instances that you can actually take away and apply, or compare to your existing business for how things are set up depending on the type of product you have. ClickUp's Lifecycle, 2 phases, self-serve, sales assist. Self-serve feeds into sales assist. Sometimes the two can happen in tandem or like individually, but for the most part, we have a very connected instance where people start using the product, they try the product, and then they begin talking to sales or considering what things look like on a more customized basis. Now, going into this, basically we use Iterable for our self-serve journeys, and we use Marketo for our sales assist journeys. Wes is our head of email ops, good friend of mine. The reason we do that for Marketo is because of Salesforce parity, but Iterable, great tech for self-serve. We've been using it for a couple years now. So we'll talk about a lot of that. In terms of journeys, this is basically how things get split initially. We're looking at 2 different instances of acquiring emails. One of them is just capturing the email on the site. The other is a user getting invited. After that, we're basically taking a few key events, being mobile, whether or not the invite's accepted, activation, and whether or not someone's a PQL, before we then split something into self-serve and sales assist. Now, we'll get into segmentations and what that all looks like too in a moment, but when we think about self-serve specifically, here are the key instances we analyze. We analyze somebody's role type, so whether they're an owner, an admin, or a user, their activity, whether they're active or inactive, what features they've used. We have a very complex product, but it can also be very simple, but there's a lot of features, so features matter. Typically, some features tend to lead to revenue more. And then also, what plan type are they on, right? Are they on our freemium plan, or are they on a specific paid plan? What matters there? And then after we've assessed all of those things, we determine, hey, let's go into the monetization buckets for how we can influence buying behavior. What the buying behavior looks like is product paywalls, cart abandonment journeys, upgrade, downgrade journeys, everything you name it. But that happens after we've assessed all those different instances. Now, what does Sales Assist look like? Sales Assist looks like determining whether or not someone is an SMB or a mid-market and enterprise. For us, that's basically the fundamental split, and then we go into use cases. Once we've determined who someone is, we say, how are they using the product? How do they want to use the product? And then, are they qualified or not based on the existing instance to talk to them? Let's just say, hypothetically, we have a lower level manager that signs up for the product, they're using it, they're from a mid-market company. Well, that leads to one or two things. Either that person is qualified or they're not. If they're not, sometimes we can use that to do ABM expansion campaigns and all that kind of fun stuff. But I'm not going to talk about that today, but that's where kind of demand plays into this whole funnel. But basically on the fundamental level, when you're thinking about a user journey, once you determine qualification, you engage, they either become ready to meet with sales or not. And then from there, sales goes into the process, they start their journey. Now there's 100 other different ways that sales can get involved in this process, but this is just our example for typically how this looks for the majority of our users and our customers being a product-led growth company. Data infrastructure, this is a fun topic. The modern data stack and then warehouse first attribution. This topic has like so many layers to it. I'm gonna just present like the most simple fundamental sides of it, but there are some really fun things to look at from a graphic standpoint and how things are broken down. Mark, another good friend of mine, is our head of data and analytics at ClickUp. You need to have a first party warehouse first data strategy. And what does that look like in a nutshell? That means you have your data warehouse, be that Snowflake or whatever you're using. You have all your different inputs for customer data, basically wherever you're spending money, all that good stuff feeding in to your data warehouse. That then gets articulated into what we'll call a customer 360 profile that gets you all those different inputs that we broke down that journey by. And then that is fed back to the platforms. So you can actually use the platforms, be that marketing automation, CRM, CX platforms, or ads to actually create user journeys and experiences that we can control for every different stage of the life cycle. Now, warehouse first attribution, this is a flow and an example where you're giving different weights and touch points based on engagement behavior. These are all marketing activities and touch points, and you're weighting those based on where they've done it, and that feeds into comparing to, you'll see at the very top, multi-channel spend data. If you're comparing things to what did we spend on a channel, what did it get us, and really what comes out of that behavior. But ultimately, weighting those instances allows you to get to what is the topic of attribution, which is another very, very deep instance that we can save for another time, but I will touch on it lightly. These are a few examples of how, when you're weighting out touch points, you can start to look at attribution. There's a sales form submission with a 7-day first touch, product sign up with a 7-day first touch, or a sales form submission last touch. You can see the different colors there for where weights are applied and how things look. Again, every different business has different ways they can look at this, and these are just a few examples. But you do need to have a solid data infrastructure, and you do need to have a way in which you're weighting out user touch points and marketing touch points to say, how does that influence our customer 360 profile? And if you don't have a customer 360 profile, you need to take a step back and think about who's my customer, what size are they, what are they doing, and why do we care about them? That's a whole different topic for a whole different session. But key takeaways, and then I'll pause. Really, I want to get some action out of this, so if you guys have been listening, I can go back to anything, but I'll summarize this pretty lightly. Now, lifecycle is imperative. Lifecycle matters. This is how we have influence. Every different funnel stage that I called out, every different area, tactic, method, example, this matters because this controls unit economics. Again, unit economics, the big ones I called out, they're all typically lagging indicators. They're what happens after the fact. It's like looking at a game after it happened and saying, hey, why did the 49ers lose, right? Who cares? Watch the game, figure it out, figure out what you can control, win the next game. I'm a Niners fan, so I'm sorry in advance. But with that said, consider we're playing the game. We're figuring out how can we win the game, how can we get things in a better place. The market's in a tight place today, so we need to be more and more methodical about how we own lifecycle. Now, unit economic benchmarks, if you didn't write anything down around this, these are the key ones. 2.5x growth rates, this is typically what people are looking at today in the market for revenue metrics. 120% is considered really good NDR or NRR. If you're above 100% though, that's also a good spot to be in. And you want to look at NDR and NRR broken out typically by self-serve and sales assist, and you can compare that separately. A lot of times that metric will look different depending on how you analyze it, as well as by the segment, depending on whether you're looking at an SMB, mid-market, enterprise, or a very small SMB or a micro account. And then CAC payback, just think, hey, it's typically got to be less than 12 months. It has to take less than a year for us to basically acquire or reacquire what we spent to acquire a customer and bring somebody in. And there's 100 different ways to analyze that, but 12 months, less than that, that's typically where you want to land, especially in today's market. Now, the key takeaways, know the market. This is more important now than ever. Tech is going through a lot, as we mentioned. So not only understand like the input and the disciplines, but also understand the macro factors that influence this, because this is the stuff that the board cares about and execs care about. You want to get in their heads, because if you can read their minds, you can figure out how to talk about what you do in relation to this journey and position yourself better, especially when we work in marketing. And as an exec or as a board member, obviously we stay plugged in with this kind of stuff, but these are the ways everything connects from a more tactical standpoint. So depending on who the audience is, majority marketing folks here, but if you are a tech exec or on the board of a number of different companies, this is typically what all the people who are doing the stuff in here care about and should be doing. Understanding lifecycle, obsess over this, obsess over every aspect of the customer journey. There's typically one thing you can do that will influence the majority of behavior. I'll repeat that. There's typically one thing you can do within your lifecycle that will influence the majority of your customers' behavior. Everything else layers in around that. But you want to figure out what is that one thing or that couple things that we can optimize around. And if you haven't figured that out, test a bunch of stuff. Test a bunch of stuff. That's what we do for a living. But test it, figure out what those couple things are that you can optimize the most around. Everything else will just support that. But that's the foundation for your house. If you're building a house, figure out what basically the people who are going to be living in the house care about. That's the best way to look at it. Now, breathe your unit economics. Everything has to do with unit economics, unit economics, unit economics. At least understand where you land, right? Just have the understanding of where you're at today and understand where you have control in terms of where you want to get. And if you don't understand that or you don't have that baseline, try to, and then come up with a plan or get resources or do research. There's so much content out there these days on this type of stuff. But ultimately, you got to know what to look for. And that's the biggest thing to start with. And then mapping your cadence and analyzing it. You need to create a living, breathing map of your customer journey that is getting updated regularly, that is attached to analytics. So it's one thing to have all the different stages beautifully mapped out for every single thing a customer goes through, but if you're not tracking the exact metrics that have to do with that particular stage or that particular cadence, then you're going to be in the dark. The simplest way to do this, though, because there's typically 100 different touch points, figure out those 1 to 2 things that matter, and then track those regularly, and then see how they improve or don't improve, but test a bunch of stuff, figure it out. That's what we do. Thank you guys. Really appreciated the time. That's my personal email. And if you want to connect with me on LinkedIn, I will accept all the connection requests today only because I don't think anyone here is going to spam me. Thank you.